While people are still joining in, Heather, do you want to move to the slide where we can show a rating where people have an understanding of how much they know about the Inflation Reduction Act and the prevailing wage and apprenticeship laws needed for it? So while people are still trickling in, I'd love to see, for the folks that are already in the room, if you can put in the chat what your experience is from 1 to 5, so we can better cater this webinar to your understanding and kind of level the expectations there. Be also helpful to put in the chat what state you're dialing in from. Perfect. I see a few coming in. If the rest of you could put that in while we wait for a few more folks. Perfect. I'm seeing a few responses. If the rest of you, I know a few of you just joined, just to remind you, we have the scale from 1 to 5. If you could put in from 1 to 5 what your level of understanding is with prevailing wage and apprenticeship laws for the Inflation Reduction Act, put it in along with the state you're dialing in from. What this helps us do is calibrate how to tailor the webinar and presentation to your understanding, so we get into the nitty-gritty details that you need to get the most out of this webinar. We'll also have some time towards the end where you can put your questions in the chat, and we'll have Heather answer them in detail so you have an understanding. We'll just give it one more minute and we can get started then. Got a wide representation across the country. Very impressive.
Yeah. And in states that I'm not surprised by. Yeah.
One interesting thing I think a lot is top for people's minds is just how things are changing with the current government and how that's going to affect the IRA. And so we'll be getting to that in this presentation as well, to give you all an understanding of what to expect, what's still there, what we expect to be taken out, so you can plan for projects accordingly. Perfect. With that being said, Heather, does it make sense to get started?
It does. I am ready.
Fantastic. Do you want to go ahead and introduce yourself, and I'll intro myself right after?
Sure. So this is me. I have been working in the prevailing wage labor compliance space for a very long time. When I went to college, I did not expect this to be what my future looked like. However, I'm pretty sure riding a unicorn was never possible. So this is second best, but still pretty excellent in my head. I love what I do. This is a very niche space, and I find it quite enjoyable. I think people who love to cook kind of strange. So I guess we could have that in common. If you think my love of this is strange, that's okay. I'm here today to help make this a more approachable topic, and all your questions and clarifications that you're looking for, please feel free to ask during the presentation today. That's our goal. I don't want to just stand here and talk at people. It goes better if you actually get something from it because you've opted to spend your time here. with us today. And Jill?
Perfect. Thank you, Heather. Thank you, everyone, for joining the Best Practices in Prevailing Wage and Apprenticeship for the Inflation Reduction Act. Heather and I have been in this space for a while now. We've been seeing this evolve as it happens, and there's a lot of changes, but a lot of money up for grabs for construction projects. Heather is the owner and CEO of Prevailing Wage Consulting, a consulting firm that streamlines the process with consulting services and staff for prevailing wage and apprenticeship. I'm the CEO of Pivla, a software company that provides all the nuanced software needed to track credits, track penalties for the Inflation Reduction Act credits, and also provide the reports necessary for the IRS to make sure you get the 5x multiplier for the Inflation Reduction Act for a bunch of incentives. And so what we saw in the industry is there's a lack of optionality in terms of software to track the stuff most people are tracking in Excel. Most of the other softwares that are coming out in the market, a lot of them are bolt-ons to existing prevailing wage software, which really don't address the needs of what's needed for the IRA. And so Pivot was created to be laser focused on the Inflation Reduction Act and tracking everything from the credits to how the penalties stack up to making sure your apprentice to journeyman ratio is intact, all the way to producing the necessary forms to go with your tax credit study so you get the money you're trying to get from the Inflation Reduction Act. What's unique is that we've gotten a market with Heather's firm. And so we've been helping a lot of firms, not just on the compliance aspect and on the labor staff aspect, but also on the software aspect. And so together with Heather's firm, we're a complete turnkey solution to handle this. So you can focus on your bread and butter, which is construction or a lot of these projects, and we can take care of more of the compliance and have that abstracted. A bit of background about me, I come from the software space, previously led go-to-market efforts for Salesforce and SAP, and was actually at Deloitte working with construction Fortune 500 clients on labor compliance issues. So saw this firsthand for a bunch of other incentives. But when the Inflation Reduction Act came out in 2022, this became a much bigger issue. And so that's why we went ahead and tackled it.
So without further ado, let's talk about tax credits in the inflation reduction space, which is why everybody came today. Here's our agenda. So if you have questions, you can ask them at any time. And if I'm going to talk about it a little bit later, I will mention it, but that's okay. Go ahead and raise your little hand with the little hand icon at the bottom of your screen, or go ahead and put your questions into the chat as we'll be watching that. Without further ado, let's press on. Some details to remember, and we will be providing the slides for today's presentation. So if you're gonna wonder about that before I get going, because I get super excited about this, we will provide those. There's a whole lot of information that you definitely want to keep up with, but there's a lot more that's not included in today's presentation, just because that means it would have been far longer than 1 hour. Okay, details to remember. There are key dates that impact the Inflation Reduction Act. Some call it the IRA, some call it PW&A, however you want to call it. The very beginning of the IRA, in my head, I call it the Wild West days, because they had parameters, but it was very loose and not incredibly defined. So if you're trying to get the tax credits, it was far simpler to get them because it was more Wild West days. And then as time went on, like all good legislation, it was refined and tweaked here and there. And then lots more parameters started being built into the process. So January 29th of 23 is a big date to remember. There is another big date to remember coming up, which is going to be in 2030. And the key component for these are it dictates the type of tax credit, the amount that you can earn, as well as what's the goal you have to hit with the IRA requirements for this. There are several types of tax credits out there, and some of them require apprentices and some do not require apprentices, but they all require prevailing wage rates to be paid on the projects. And then there's a little bit of reference on where you can go and get more information. If you're interested in the exact nitty-gritty, where in the legislation or where can I reference this in the tax code, so on and so forth, feel free to ask. It's not referenced on the slides throughout, just a couple times, but we definitely have all this information from that. Here are several of the tax credits. Some of the tax credits that may be impacted with the latest legislation appears to be those that are directed towards residential tax credits. So for energy efficient appliances in your own home, or installing solar panels on your own home, or EV charging stations, things like that. As far as the commercial tax credits go, it looks like the latest legislation is not going to really impact them. And here's a list in front of you of what some of those tax credits are. Each of these are interesting because they bring something else to the table as far as renewable energy goes. And for some projects, I've actually seen where developers are actually stacking some of the energy sources. So they may do below ground with geothermal, but above ground with, say, wind or solar. It's interesting because then their goal is to go after the tax credits for both type of renewable energy, and it's on the same plot of land or under for that. Some of these tax credits are more well known than others. The reason for that is because it's just more common for that. The labor reporting, as far as the prevailing wages and the apprentice requirements, are the same throughout. If it has apprentice requirements, it will be consistent. Let's talk about wage rates and the details that go with them. The first thing that happens on a lot of these projects is you need to know, when you're bidding a project, what the wage determination is. There are a couple things that are quite unique about PW&A projects. Is if you are self-performing any of the work, that wage determination is updated as soon as you start self-performing the work. If you are a prime contractor, and let's say you start the project as of June 1st of this year, you pull your wage determination. That's the wage determination that's going to correspond with signing the contract, so on and so forth. That's great. If you start self-performing work in 7 months on the project, that wage determination for your self-performed portion of the work will be the latest and greatest at that time of when you started working on the project. And that can be quite confusing because you as the prime now have a different wage determination that you're utilizing on the project than everybody else. And that is a deliberate nuance of the PW&A requirements on these types of projects. When you pull your wage determination, there are 4 types of wage determinations. There's residential, highway, building, commercial, and heavy. I like to say building/commercial because the word building is used all the time in construction and can get quite confusing when trying to figure out if you're talking about an actual structure or a wage determination. On most PW&A projects, you have to understand specifically what the parameters are for the wage determinations. It is not uncommon for there to be more than one wage determination on a PW&A project. It is not. It could also have state or local requirements depending on where you're located. So for most, I would say at this point, almost all California renewable projects has a requirement for state reporting. So it's not unusual that you have to balance the state wages as well as the federal wages. You always default to paying the higher wages. You just have to make sure that you're using the proper wage rates. The two most common wage determinations used on renewable projects would be the building/commercial and the heavy. They're not the only two that can be used, but those are the most common that are used. The heavy wage determination is usually a little bit of a catch-all, but it now has had the additional category of solar plants over 2.5 million. That has been added in the last couple of years, specifically and deliberately because of all the renewable energy projects. So that is fantastic. I'll mention a couple times throughout this presentation, there are certain things that because of the renewable tax credits that have been brought into and then been utilized for several years now, it has changed forever, I think in a positive way, the construction industry. Here's some definitions that are, quite frankly, jargon to a lot of people. So if you don't understand what you're looking at or whatnot, this is just a quick glance. I try not to use a whole lot of jargon when I'm talking with people and presenting to them, because it's not going to help anybody understand anything better. Here is an example of, or two examples of wage determinations, both located in the state of Georgia. And the one on the left is for building and the one on the right is for heavy. There's distinct nuances that you need to make sure are accurate when you're working with wage determinations. You need to make sure it's with the proper state in the proper county and is the proper building type. The building type is very important because if you use the incorrect one, you'll probably be paying the wrong wage rates. And rarely do you want to pay extra just because, and you definitely don't want to pay too little for that. There's on both examples on the screen, you'll see that there are two places that are highlighted. That is for Executive Order 14026. This is the minimum hourly rate that can be paid on federal construction projects. If a project is going for the tax credits, then it is going to be a federal construction project. And these projects they are not part of the exception, they're part of the rule. So therefore, you have to follow Executive Order 14026. This is a question that we get asked quite often, my team and I. We get asked, what executive orders apply and which ones do not. Executive Order 14026, 13658. Those two are both listed on the front of the wage determinations. Those apply to renewable projects. Question that I get is, where do you find your wage determinations at? You find them on the sam.gov website. You can go on there and search their website. They have a drop down that says wage determination, and you just go through the process. You pick the state, you need to know the county, and you need to know what type of wage determination category: residential, heavy, highway, or commercial building. And then you can go from there. The biggest hurdle a lot of companies fail is they need to make sure they're utilizing the proper wage determination. If you have a subcontractors bid on a project early on and you use a wage determination that was last modified January 6th of 2023, and then you don't actually start on site until, let's say, July 30th of 2023, that wage determination was most definitely probably updated in that 6 to 7 month time frame. So you need to make sure and utilize the proper wage determination, but also realize that the wage rates that were utilized in the bids are now going to probably be too low because they were using the older wage rates. It's not guaranteed, but you definitely need to take that into account. There's a lot of our clients that are struggling with that. They did the bidding portion, let's say last year, and now they're trying to get going this year as quickly as possible. And they have, and they are starting to work on site, and it's going very well. But then when the labor reports come in, their subcontractors are not paying enough. And it's not because they weren't trying to, it's just they were utilizing the incorrect wage determination. And where they got that incorrect wage determination was the time lag between when they bid the project and when they started on site on the project. And that's painful because then that's something that has to be rectified by the EPC, general contractor, whoever is the owner of that project.
Before we head into the next slide, Heather, I just want to open it up. Does anybody have any specific questions so far? You can put it in the chat, or you can raise your hand. I can bring you off mute and you can ask your more detailed question. But if we don't get anything, I'll assume we're good for now and we can keep moving on. Any questions so far? Okay.
You're waiting for the apprentice part.
The long-awaited one, right? So I'll let you get to
Yeah.
it then. Go ahead, Heather.
Yes. Okay. Next, what you're looking at on this screen is an example of sections of the wage determinations. Key takeaways on this are this is the same wage determination. So takeaway is on the left-hand side, there is 2 listings for electrician. Notice one excludes low voltage and one includes. And then on the bottom, it says power equipment operator, but then on the right side, it also has operator. So when you're going through your wage determinations, you need to read the whole thing. If you're trying to figure out what the total package amount is for a specific trade classification, you would take the hourly rate plus the fringe benefit amount. So if you're looking at carpenter formwork only, it would be $18.02 plus $0 in fringes for a total package amount of $18.02. This seems pretty straightforward until you start adding in things like the cement mason is being paid $10. Well, that's below Executive Order 14026. If you look at electrician, it says 31% in fringes. And then the real kicker in the pants, because we were talking about apprentices actually next, where's the apprentices listed? Dang it. So a wage determination only and specifically deliberately only lists journey people. There's no place on here that will list apprentices, period. Anybody who tells you differently is reading it totally incorrectly. There are wage determinations out there that do list apprentices, but they are not federal. This is a federal wage determination. If you're in the state of Texas or California, and even Wisconsin, in certain counties, but they will have wage determinations that can list apprentices. Those are state or local, city specific. They're not federal. So it's not that you can't use them, you can, but just realize you're not looking at a federal wage determination. And that's a big deal. You need to make sure to include that. So federal wage determinations only have journey people listed. There's a formula and a whole process to figure out what the hourly rate and the fringes are for the apprentices, which we'll go to next. So on IRA projects, you have to either have a DOL approved or state approved apprentice. And this is important. What we're finding is happening, which is unfortunately not surprising, is there are a lot of apprenticeship programs that are not approved by the states or by the federal government. And if they are not, then you cannot account them as an apprentice on your project. And on a lot of the IRA projects, there's the 4-to-1. And what that means is out of 4 people, one of those people have to be an apprentice, at least one. So, and that's just the bare minimum parameter. What gets it to be a little more confusing, or a lot more confusing, is you also have to take into account the apprenticeship program standards and their ratios for that particular program. So let's take carpenters, for example. If their apprenticeship school has a 1-to-1 ratio and you have a 4-to-1 requirement on this IRA project, Okay, got it. So you can have one carpenter journey person and one carpenter apprentice working together on the project day in and day out, you're good. Okay. If you have a 2-to-1 ratio, that means you need 2 carpenter journey people for 1 apprentice carpenter ratio to be met. And it has to be the full time that the apprentice is on site. So it can be a little bit hairy with that. And then you also need the apprenticeship program standards to understand and calculate the hourly rate as well as the fringes to see what those breakdowns are. A good way to tell if an apprentice is an approved program is you have to get a certificate from the apprenticeship school. There's an example on the screen that has the seal. There's a watermark, and then there's also the seal that shows the Department of Labor. And that you can tell quite simply. Otherwise, you can check the first couple pages of the apprenticeship program standards. There'll also be a seal from either the state or the Department of Labor Office of Apprenticeship. And it'll be in there saying that it was an approved program for that. It's been interesting the last several years. There has been a bunch of changes in the apprenticeship world, which has been exciting to watch from a distance. There used to not be solar panel installation apprenticeship schools, but there are now more. There was one that started several years ago, but it was like the slowest growing. And then all of a sudden, there was this massive need for solar panel installers all over the country. So there's a couple of them that opened up in around Arizona, California, as well as in the New England area. And there's definitely a need all over the country, but because the renewable energy tax credits came down, it actually expanded this possibility. And then if you think about it, solar panel installers, they're not necessarily roofers or electricians or laborers. They're a combination of all these things, but you can't take a solar panel installer and then have them be an electrician and work on electrical stuff in a commercial building. They don't have the same skill set. So now there's these apprenticeship schools that are actually reflecting that. And that's exciting because it's something that has been necessary in the industry for quite a while now. But these tax credits actually pushed it so that way they finally have their own apprenticeship schools. So that's exciting. Okay. Something that is often forgotten is a lot of the backup documentation. When we're doing labor reporting, I get asked quite often, and my team get asked all the time as well. Well, I submitted the certified payroll report. Now what do I need to do? Like, well, that's step 1. You need to submit all the stuff for your apprentices. You need to submit the deduction authorization forms anytime you take money out of somebody's paycheck. You have to submit all this additional documentation. If you do not, then that means you're missing some critical information as far as the certified payroll reports go. These are just a couple of the items that my team and I help manage on these types of projects because it can get overwhelming depending on how many people you have working on these projects. There are lots of types of deductions that are approved and unapproved. Something that some companies struggle with is the admin fees for court orders. Certain states, like let's say the state of Nebraska, they allow you to take, I believe it's still $5 a month, but they're allowed to take a nominal amount out for admin fees that the company can recoup for processing court orders. That is not allowed at the federal level.
Heather, I think we have a question in the chat. Christian says, has the Department of Labor changed their decision and approved solar installers as an apprenticeable occupation?
So I have actually had a couple projects get approved and get the tax credits with solar installer as an apprenticeable occupation. Yes, I can say that there are certain states that we've also requested that to be approved. and it is still pending.
Mhm.
So I want to say that it's quite quick in certain states that it's a fast yes, and in other states it's more of a, I don't know if it's a slow no. Um, it's not a solid no yet for us, but it's been slow in responding. So it makes us question ourselves every day that it's delayed. Um, our argument with the solar installer is that they're not certified to be electricians, and they're not certified roofers, and it's a very specific skill set. It's kind of like for people who are asbestos and abatement, they're very specific in what they do and how they do it, and there's a reason behind that. Radon remediation, same thing. There's reasons why they install solar panels the way they do, and that's why they have to be specially trained. So, yeah, I was hoping with the more schools opening on both coasts that it would be more easily approved consistently. I think it's helping, but we're still waiting. Okay. And it's kind of in the States, it's kind of strange to me too, because they have a lot of solar projects. Um, anyway, okay. So I already kind of touched on some of the apprenticeship related type items. With the 4-to-1, I get asked that all the time, guaranteed. If we're going to talk about an IRA project, somebody in the group will ask me, what's that 4-to-1 thing you're talking about? Or I hear all the time. So we chatted about that. The big stumbling block with the apprentices outside of calculating their hourly rate as well as their fringes is making sure that their hours are correct on the job site. So it is like the epitome of workforce management as far as your hours go on site. For apprentice ratios, uh, apprentice percentages, facilities that began construction before 23 was 10%, and then after it's 12%, and then it's supposed to be 23, 24, 25 on that slide. It's 15%. So each year it's increasing, and then by the time we get to 2023, it's going to be even harder to be able to hit those apprentice ratios. The standard thing that people are saying is, well, I did the best that I could with my apprentice ratios. I don't know what else we can do, and I'm just going to go from there and hope for the best. There is a workforce shortage, but that's been that way for years and years and years. So how long that's going to be a good reason, I'm not sure. What I can say is there are things that you can do on these projects to help explain your story better, um, as far as the ratios go with the apprentices. And some examples of good faith efforts. The way that I like to kind of coach the good faith effort is you need to tell a story. And that story does not start at the end of the project. That story starts at the very beginning of the project when you bid on that project. What my team and I do with our clients is we start working with them at the beginning bidding portion of it with the potential contractors that would like to work on the project underneath you and your clients. And we come up with a plan for them to have their apprentices working on site. And it's not just a singular plan. We have several plans in place because when you're working with people, things happen. Life is far stranger than fiction. So we come up with different plans. And once plan A is no longer an option, then we automatically pivot to plan B. During that time, we have a certain amount of ability to course correct or cure any errors that had happened as far as the overall percentage goal goes on the project. So we work with that. We also go through all the steps that we can to help request apprentices and or show that there are no apprentices out there available to work on the project at this time. And we've done all the things that we could, and they're not available. And then we keep meticulous records. The record keeping aspect is the same on the IRA as it is on Davis-Bacon Act and other prevailing wage projects. Record keeping is a big deal. It is something that a lot of renewable companies are struggling to keep up with. Keeping it in a folder in your email inbox is not sufficient. There needs to be a lot more detailed information into it. It's not just emails or just phone call notes or anything like that. It's a combination of meetings and calls and emails and plans and correspondence back and forth and all the planning that goes into that. That's what goes into good faith efforts. What's happening is in the last several years, and it's going to consistently get harder and harder for quite a few companies going for the tax credits, is they're trying to use the good faith effort exemption and they're putting minimal effort into it. And it is not going very well. Some of them are kind of squeaking by and getting the tax credit. Some of them are getting reduced tax credits. You don't want to do that. You want the 5 times multiplier. Why not? Why go for less? Go for all of it. Especially if you've already paid for all the prevailing wages and everything that goes with that, then you should go for the max tax credit for that. But that's something that has been happening quite often, and it's the component that a lot of our clients and just in general, I get a lot of calls and questions about this. Well, we'll just use the good faith exemption as our Hail Mary save. And my response to that is ooh, you live dangerously. I don't want to live that dangerously. I'd rather just ensure that I can get the max tax credit. And there's lots of steps that you can do to get that. Any questions before we pop into fringe benefits, especially with the apprentices?
Perfect. We got one from John. In a
Yes.
17090 application, the parties required to compile documents and retain them?
Yes.
Mm-hmm.
If you're questioning, if you're going to ever ask me, should I have record keeping steps in play and it involves labor reporting, my answer will always be yes. There's a lot of IRS regs, all parties. So what happens is the subcontractor, so let's say there is the owner, the EPC, and your first tier and your second tier. So there's 4 tiers here. Your lowest tier should keep all of their record keepings for all the stuff that they've done as far as the prevailing wages and the apprentices go. The first tier should keep all the lower tiers and theirs, and then it goes all the way up. So ultimately, the EPC should have their information as well as all the lower tiers information. And then the EPC should also provide it to the owner, developer, whoever that is. And then whatever party is going for that tax credit, usually the owner, then they will need that documentation as well. So each party should have theirs, but it always rolls uphill to whoever the actual owner of the project is. It is absolutely something that will be required from the IRS. Now, when providing the documentation to the IRS for the tax credit application, you're not going to necessarily provide absolutely every last bit and piece that you were provided from the subcontractors. There are specific documents that are needed. What we normally do with our clients is we provide them with, this is all the information. And then here's the bundle that's specifically for your tax credit application. So, and because you don't want to provide them too much information because it's just more stuff they're going to have to weed through, and they're not asking for it. If they want it, you'll have it, but they ask specifically for what they want. But yes, it should be every party keeps up with theirs. What can happen is if and this is kind of far-fetched, but if the IRS wants to interview and review the information for a tax credit application, they can go and talk to the owner, and then they can go and talk to the EPC and all the lower tiers. And it's not specifically the IRS that would be questioning it, it would be the DOL, because for the most part, or the Department of Energy. The Department of Labor is the overall oversight as far as labor reporting goes. The Department of Energy has their own consultants that they utilize to make sure that labor is being complied with, the prevailing wages and all that. They have their own element of labor enforcement, if you will, or I should say labor oversight. And then if the Department of Labor needs to step in and do their reviews on the project, they absolutely can. So both entities have their own labor oversight. And I say Department of Energy, there's also Department of Transportation, and they all have their own oversight as far as labor goes. So you don't want to be caught without your documentation. Okay, fringes. I believe strongly that companies should take credit for what they're already paying for, especially if they can take credit for it as a fringe benefit. There are a lot of components to what is an approved fringe and what is not an approved fringe. The key ones that are, I think, the big elements or traits that would be an approved fringe would be they have to benefit the employee, be reasonably anticipated, enforceable, managed by a third party, and communicated to the employee. Basically, let me re-say what I just said. You need to have this written in your company handbook exactly how you intend to provide it to your employees. And it needs to be overseen by a third party, whether that is, let's say, a health or an insurance provider or a retirement provider or a third-party CPA that audits your company every single year, third-party oversight. There are a lot of parameters to what is an approved and what's not an approved fringe benefit. There are some potential categories listed and some unapproved categories that are listed, as well as the formula for this. I like to use the example of the insurances because it's pretty straightforward. My rule of thumb is if you have an insurance provider that's a nationwide insurance provider, let's say like United Concordia, they're nationwide, well-known health insurance provider. They have plans that are created specifically for companies in the construction industry, and they offer a solution that is an approved fringe benefit. If it is not self-funded or customized plan for your company, there's a very good chance that it is an approved fringe benefit. It's not a bad thing that you get an out-of-the-box solution from a big provider of insurance and or retirement solutions for your employees. So example one on the left is for a couple different types of insurance. And if you look at the formulas, notice the life insurance formula is a bit different. That's because the cost is based on an annual cost instead of monthly. The thing to remember with these formulas is that the 20,080 hours is based on a person who has 0 time off paid. No vacation, no holidays, none of that. The example on the right is an example of somebody who receives holiday pay and paid time off, but they have a use it or lose it policy. This use it or lose it policy means that their PTO is not an approved fringe benefit because it's not reasonably anticipated. So if you look at the formula down below, you'll see that the 2080 was reduced by 48 hours. and then you get the fringe benefit hourly amount from there. The third example is kind of a mashup of the last two with a slight couple tweaks. Notice that the paid time off is now use it or get paid the balance at year end. That means they reasonably anticipate getting the paid time off or dollars in lieu of paid time off. And then you can see the formula. We take the 2080, reduce it by the holiday and PTO time, and then we do the math. And you notice that their fringes have changed just a little bit because it's instead of being based on 2080 hours, it's based on 1952. So you may not think this is a lot per hour, but if you multiply it by number of workers per day per hour, it's quite a bit of money over time. That's why I say companies should take credit for the fringes that they are already paying for. Questions on this? This is something a lot of people don't really want to talk about because they're not quite sure what's going on with it, and they kind of feel like they should, but they're not really sure, and they're like, I'm overwhelmed. So this is kind of a crash course in the fringes. Okay. This is the part that I find super fun. Again, I realize I have strange hobbies, but this is where everything boils down to. Once you've walked through all the bits and pieces, you're trying to make sure that everything is reported properly. You need to create a certified payroll report. You've already done the hard work. You've bid the project properly. You've had the ratios on site properly. You've paid the workers properly. And this is where it's all going to culminate right here. A lot of times companies forget to put in the pre-work to be able to get this to where it looks fantastic on take one. And then they have to do several takes before they can get it correct. That's okay. Just realize you're doing extra work. This is a WH 347 and 348. It is the updated version of the government's certified payroll report. It actually got updated this past year in January, and the old one was kind of a blue-gray color, and they've made this one very orange to make it stick out a bit more. The key things to remember on this form is it has the standard stuff on it, but on page 2, they're very much calling out the apprenticeship program name, and if it's approved, their labor classification, which is also known as their trade classification, and it's asking for their fringe benefit breakdowns. So in the past, the old version of the form requested these things, but it wasn't so clearly stating you had to provide it. So they've adjusted it here. I would not recommend filling out this page 2. I would put C attached and then do yourself a mercy and use like an Excel spreadsheet with the same formatting in it instead of this, because it hasn't quite come out with good formatting on this yet for that. But this is where everything culminates. So if you submitted your documentation and you're getting pushback on your project for the tax credits, or you're concerned, well, we've already worked on the project, we're not sure if we can go and apply for the tax credits because there's currently legislation for a look back that we're also paying attention to, because if that's the case, then that's going to be a fantastic opportunity for a lot of projects and owners. If that's the case, the first thing you're going to need to do is start collecting all the documentation like these certified payroll reports. And you're going to ask, well, is it going to be worth going back and getting all this documentation and paying what is owed to the workers if I can, is it a lesser amount than the total tax credit that I can potentially earn? And the answer to that is, I don't know. I'd have to do some research into it. And it's on a project per project basis. It truly is for that. But this is where you would start with that. There's not a magic way to say that I can look at a project and you tell me, this is a $5 million project, it's solar, so on and so forth. We built it in this place at this time, and you say, would it be worthwhile for us to go back and request the tax credits on this project? How much would that cost us? I can't tell you anything. I need to dive into the labor reports on the project, or at minimum have conversations with the companies that worked on the project to see where they're at. So I can get kind of an understanding, because it's all about cost benefit analysis with that. Okay, what other questions do you have for me? That's some good questions so far. That 179D, I was excited when they rolled that into the IRA. Not surprising, but exciting.
If it's easier for people, if they have more detailed questions, just feel free to raise your hand and I can take you off mute and you can ask Heather.
No questions? I kept it pretty high level. I didn't want to bog down everybody, but I do have lots of intel in my head, so please ask. I would say the biggest stumbling blocks that we have found are if you're not quite sure what it means to be PW&A compliant, then you should stop and get help with that. And if you're mid-project, it's not too late, but you need to like move quickly to get help with that. Kristen?
Yeah,
Go ahead, Kristen.
thank you. It took me a minute to figure out how to raise my hand, so I don't know if anybody else is having that issue as well. But I need to go back to this solar installer thing, Heather, because
Sure.
to my knowledge, Florida is the only state that has approved that, and it is only within the geographic boundaries of Florida. Outside of that, the DOL has clearly said they do not see this as an apprenticeable occupation. So I'm a little concerned or curious as to how you feel like that would be a viable IRA strategy if the occupation doesn't even exist. We've been using construction craft laborer on our solar side specifically because the DOL won't acknowledge it.
Sure. So for me, it depends on who we're asking for it, because we've used it in Florida, but we've used it in a couple other states as well. So when we request the conformance through the IRA, I call it the IRA inbox, that where you fill out the information requesting.
And they never answer you ever. Yeah.
Yeah.
Got experience with that.
Yes. It's joyous, isn't it? We have gotten some positive responses in certain states. They've gone ahead and approved it for us. And because we've provided the documentation, it's not just us saying pretty, pretty, please with sugar on top. We've provided, this is an apprenticeable trade classification, and here's why. So there are solar panel installer. I'm forgetting the exact, it's like 3 words. But solar installer schools that are located down in like Arizona, California, Nevada, that kind of area. And so our argument is there's a whole dang school down there with all of these people that are graduating, and we have the approved apprentice certificate.
So before I repeat you and quote you
Mhm.
to a group that I'm joining, so this is, I'm assuming, an SAA state that you have gotten to accept this as an apprenticeshable, and they're able to produce Davis-Bacon certificates. They're able to give you all of the documentation needed, like just like they would, because without Rapids, I don't even know how you would do that.
Right. So it is an apprenticed through the state and the feds apprenticeship program. So yes, it's just like any other apprenticeship school. We request the certificates and they're able to provide them. Where we're struggling to get that foothold. So we've been able to do that in the Southwest. And then we've also been able to do that in the Northeast. in the New England area, for the same reason.
It is so bizarre to me because I was specifically told I had to keep all reference to solar work out of my construction craft labor appendix A, or they wouldn't approve it.
I don't doubt it. I noticed that when we talk with certain people, they have their quirks. And that's also why when we put in our conformance to that inbox, I noticed that the individuals that work in those two particular sections of the country are more amenable to it. But if I talk to somebody in like Nebraska, they're like, nope. It's very specific, but there's also not any current active large solar apprenticeship programs in the Midwest.
Yep.
I was hoping I'm rooting for Texas to make that happen because I know for a fact that there's a couple of companies that are trying to start up their solar apprentice programs, like really big companies. So I'm rooting for them to make it happen for us in the Midwest.
Hey, Heather, do you want to move to the next slide with the QR code and or emails? Christian, great questions. I figured everybody else might be having some trouble with the raising hand function, so I've enabled the ability to go off mute. So if anybody has more detailed question, feel free to unmute yourself, ask Heather. Otherwise, if you need a more detailed consultation, Heather and I have this QR code up. Feel free to scan it. You can find some time on our calendars for a session to go over just advice on how to go about your IRA strategy, how we can navigate it together, and then we can move forward from that. But are there any other questions in the meantime? We'll have this slide up while anybody else has any other questions. And you can come off mute by just unmuting yourself and asking.
And Christian, something that has happened to us a lot is we will request a conformance and send it to the IRA inbox. And then it'll come back and say, oh, you have to send it to this inbox, but it's for the DBA, for Davis-Bacon Act. And I'm like, but it's not. So part of what we're running into is there's some disconnect with what's the process. And it's unfortunate because I thought it was pretty clear early on what the process was. But I guess because there's been a lot of shuffling in who's doing what in the government, that there's been a lot of unease. We've definitely seen a lag in conformance requests slowing down a whole lot on prevailing wage projects in general, whether it's in the IRA space or not. Which makes me sad because they had really gotten it cut down and it was solid. It was super sweet to work with. It didn't take the months like it used to. And now we're back to slow days. Anyway, well, thank you everybody for joining us today. I hope you found this was helpful. This is our contact information, and you will be getting your a follow-up email with the slides. And if you have questions, please reach out and ask questions. My team and I am the owner of my company, and I choose that we work for the most part in affordable housing and renewable energy. And I'm super excited. One of the happiest days I had was when the IRA passed all the legislation hurdles, and I started seeing projects happen in this space. So I will fully admit I was stalking the legislation long before it became enacted legislation. So we've been working in this space for a long time, and we used to do the management of the projects via Excel, because I'm a bit of an Excel junkie. And then when we had the opportunity to use the Pivotal platform, it took out all the fat fingering errors and then some. So we utilize that now. So if you have questions, definitely ask. We've been in this space for a very long time now. I don't want to say we're old, but I will say we're seasoned. And I hope you'll have a great rest of the afternoon.
Thank you, everyone. Appreciate it.